Well, this is the time of year when companies are telling investors how they've done in the second quarter. They're releasing their second quarter earnings. There's a lot of information that can be gleaned from these reports. In this morning's U.S. Bank Economic 360, U.S. Bank investment analyst Jim Russell joins us with some perspective on the latest numbers. Good morning, Jim.
Good morning, sir.
What are the pockets, the strong and weak pockets on these second quarter earnings that we're looking at?
Well, Brian, we're getting lots of information, as you'd mentioned. It looks like that maybe the industrial companies, the companies like Emerson Electric and General Electric, are out in front. Also, another pocket of strength in the second quarter looks like it's going to be technology. We're hearing from Google, we're hearing from Microsoft that really trends are pretty strong. I will tell you that in general, the trends are a little bit better than the investment community would have thought going into the second quarter. So far, about 1/5 of the S&P 500 has reported second quarter earnings, and it appears that 68% of the companies that have reported so far have beat analyst estimates, and that's a touch better than the 10-year average at about 62% of the companies actually exceeding expectations, so a touch better.
So what can we look at for the rest of the year based on what we're seeing in these second quarter earnings?
What we're seeing at U.S. Bank are a couple of different things going on. We do think that companies generally are looking forward and saying there's a lot of uncertainties. Some of those uncertainties have been documented on previous programming here on the U.S. Bank Business Watch. Fiscal cliff, the tax uncertainty, certainly the uncertainty regarding the election. I think what we're going to see are companies actually backing off their growth expectations. What we've seen so far is, frankly, while as good as the numbers look in the second quarter and they're exceeding expectations on a year-over-year basis compared to the second quarter of last year, they're only flat to maybe even down 1%. So we think that actually things get a bit softer. One other point I'd like to make is that we think that earnings estimates for the S&P 500 are a bit too high currently. Right now they're $104 per share. We think something in the $100 per share range is more realistic. So we think backing off maybe 5% or so.
Well, employment numbers are still pretty soft. What does it look like for hiring in the next half of this year?
It's a great question. It's on everybody's minds, Brian. I appreciate you bringing it up. Hiring growth is very tightly correlated to revenue or sales growth at the company level. So let's look at revenue growth. It appears that in the second quarter, revenue growth will be up about 4%. You strip out 1.7% for inflation. You have about a real revenue growth of 2.3%. That's not many widgets going out the door. So revenue growth remains pretty soft. That means it's very likely that hiring trends are also going to be maybe a little bit softer than we'd like to see.
All right, Jim Russell, we appreciate you keeping track of these trends for us. Thank you very much.
Thank you, sir.
And we appreciate U.S. Bank Business Watch.